Part 2 of Chapter 5 will continue on with banking and financial services. We're going to investigate the variety of checking account options available at Valley City banks and be able to identify financial services available to consumers. Types of financial services. What banking services do you use? Think about it. Do you have a checking account, a savings account? There's other services. Maybe you took out a loan or whatever. What types of banking services do you use? Some of the services available are savings, making payments, lending services, electronic banking, storage of valuables, investment advice, and managing of trusts. And we're going to go through each of these individually. Okay, the first thing is savings services, and this is probably what you're most familiar with. There are a range of saving plans available to you. The bank is a safe place to save your money. Payment services is the second one. Checking accounts would be one way to pay. Maybe you use a debit card. Maybe have some online payments. And maybe you have automatic withdrawals. And again, we're going to cover these in a little bit more detail, what these online payments are. But again, it's just making your payments without writing out a check. It is done online through your bank. And an automatic withdrawal might mean that you have it set up in your checking account. Instead of you writing out a check and worrying about it, the bank will automatically take money out of your account and pay your bills. Okay, the third type of service, financial service that is available, is lending services. Okay, they offer auto loans, business loans, mortgages for houses, and credit cards. And a credit card, when you're using a credit card, you are borrowing from a bank. Most people in government will borrow at some time. Remember, when you borrow money, you have to pay interest. So one of the services of a bank is lending. The next one is electronic banking. Electronic fund transfer, or EFT, is the use of computers and other technology for banking activities. Okay, how does this happen? You can use the ATM or automated teller machines. You can use what's called a point of sale transaction, direct deposit, and automatic bill payments. So ATM, we're familiar with that. You put your card in, type in a PIN, and the money kicks out. Point of sale transaction, that's what we use when we use our debit cards to pay for gas at a gas station. Direct deposit, again, we're going to cover these a little bit later too, but direct deposit is, instead of you getting a paycheck, it's automatically put into your account. And again, automatic bill pay. These are parts of services of electronic bank payment or banking. Other types of financial services is storage of valuables. Inside the bank, there are what are called safe deposits boxes, and they're used for storage of valuables. They're usually located in a vault that gets closed up every night. When you use a safe deposit box, you will put valuables. You might store valuables such as jewelry, rare coins, investment certificates, birth records, a list of insurance policies. You can see on this picture here, there are two keys. So when you buy or you rent a storage safe deposit box, you will get one key. The bank keeps the other one. When you come into the bank to open up your safe deposit box and get stuff out of it or put stuff in, you will go into the vault with your key. A bank employee will have another key. You will both put them in the key holders, open it up, take your safe deposit box out, and then you will be able to stay in that room, and go through your stuff. The bank employee does not stay with you. But in order to get into your safe deposit box, you have to have the two keys. Another service of the bank is investment advice. The bank services, a financial service, will help customers by offering financial advice on investment services, and we talked a little bit about investing. You may get help about buying a home. They'll help you decide if you've made enough money or you make enough money to buy a home. They may give you tips on money management if you're having a tough time creating a budget or whatever. They will also help customers exchange currency. Say that you're going to Canada and you need the Canadian money. You may get it right at the bank. And advice on investments such as stocks and bonds. So you can get investment advice from your bank or your financial service. Another type of service is called managing of trusts. Banks may manage investments on behalf of a customer. When they do this, the money or other property that is turned over to the bank to manage it's said to be in trust. People from all ages can use trusts, but a lot of times they are for the elderly that do not want to take care of their money anymore. They want somebody to manage their money, give them money when they need it, and so forth, take care of their bills. Or it may be young individuals that received an inheritance and don't know what to do with the money. It can be put in trust, and then they will manage it. They will give you a certain dollar amount every month from the trust, or they'll just take care of your bills for you. Again, it can be for anybody. It just doesn't have to be for the elderly or the young. Review of our financial services. Again, we have saving services, payment, lending, electronic banking, storage of valuables, investment advice, and management of trusts. And these are just a short list of some of the financial services. These are the main ones that they do. Types of checking accounts is next. We're going to take a look at some options that you have when you are dealing with a checking account. Now remember, checking account does not just limit yourself to writing out checks. It's using the debit card and transferring money back and forth from your checking account. So we're going to talk about regular checking account, a premium, interest bearing, free checking, low balance, and second chance. Some terminology before we get started on our checking accounts is what's called a service charge. And a service charge is a bank fee charge for handling the checking account. Some banks will charge you a service charge, and again, it's a fee for taking care of your account. Some banks will have free checking, no service charge, because they want you to put your money in that bank so that eventually you might take out a loan, you might rent a safety deposit box, and different things like that. Minimum balance is a minimum dollar amount that a customer must have in an account. And according to different accounts, checking accounts, there are different minimum balances, certain dollar amounts that you have to have in your account. Needed to receive some service benefits such as keeping the account open and receiving interest. So that's what your minimum balance is all about. A direct deposit is deposit of electronically funds directly into the bank account rather than going through a physical paper check. Okay, so a direct deposit is just depositing funds into your account. Instead of you go to work for a week and you get a paycheck, instead of getting the paper paycheck that you have to take it to the bank and deposit, you can have the business automatically put it into your checking account. And interest, we've covered that one before. It's the cost of borrowing money. So these are a few terminologies that we need to know before we take a look at our checking account options. The first checking account option that we have is what's called a regular checking account. Probably the most common type. You can do things like direct deposit, use an ATM, write checks, pay bills, get a debit card. There may be a service charge for some of this, and sometimes the service charge is waived if you maintain a high minimum balance, if you have a certain dollar amount in there. And again, each bank will be a little bit different on the minimum balance. And again, a lot of your regular checking accounts do not have service charges. A premium checking account, just the word premium means that it's probably a step up from a regular. Again, a high balance is required, usually about $10,000 or more that you have to have in your checking account at all times. There's usually no monthly service charge. And since you have a lot of money in there, you may receive interest on your checking account. On your regular checking account, you do not. But if you have a higher balance in this premium checking account, you may receive interest. There's some other perks. Maybe you, by having a premium checking account, you may get lower interest rates on loan. You might get free financial advice. So there might be some other little perks that go along with having this type of checking account. The third one is an interest-bearing checking account. And again, on this one, you receive a % of your daily balance or flat interest each month. So they look at what your average daily balance is, and then you will receive an interest on that. A lot of times with your interest-bearing checking account, you can have unlimited transactions. You can transfer money, deposit, pay checks, and so forth, or pay bills and so forth. And this one may have a monthly service charge to it. Free checking accounts. With free checking accounts, obviously, there's no service charge. There's usually no minimum balance as long as you have money in your account. May have to pay for ATM fees, check fees, overdrafts, etc. There might be some fees that you have to pay for the extra services, but again, the checking account, the use of the checks, and the privilege of having a checking account would be free. And there's likely no interest in this checking account. This is probably the one that fits most students. Again, there's no service charge, no minimum balance. Low balance checking accounts available to customers with low funds. Limited or no checks. Sometimes with a low balance checking account, you can only use a debit card, or maybe you can only write out 1 or 2 checks a month. You get paperless statements, which they will not mail your statement out. And you may have to do all your banking online, again, with a low balance checking account. Second chance checking accounts, that's pretty much what it says it is. It's for those people who have been irresponsible with their banking in the past. Usually there's a high monthly service fee, and it requires proof of responsibility for a period of time. So they'll watch your account for a while. If you're still abusing it, then you will lose it. But if you take care of it, you probably will continue with it. Again, our review of financial services, we talked about savings, payment, lending, electronic banking, storage of valuables, and investment advice, managing of trusts. The second part, we took a look at our checking account types. We have regular, premium, interest-bearing, free checking, low balance, and as you go, and second chance. And as you do the activity later on and start looking at the banks in Valley City, they have different names to them. It might be a gold account, a silver account, or whatever types of account. But the backbones are whether they charge interest, whether they pay interest, whether there's a minimum balance, and so forth. Next, we're going to take a look at comparing checking accounts. Remember, last section we talked about making comparisons in different types of banks. This is in the specific checking account itself. So when selecting a checking account, you should take a look at, is there a minimum balance? Okay, so that's when you start looking for checking accounts, decide, is there a minimum balance? Is there a certain dollar amount that I have to keep in my checking account? Interest rate earned, if any. Can I earn interest in my checking account or not? Again, usually if you earn interest, you have to have a higher minimum balance in there. Is there a monthly service charge? Am I going to pay $15 a month or $10 a month or even more a month just for my checking account? Are there fees for other services such as printing my checks, getting checks, ATM fees, if I need to stop payment on there, different things like that? And are there any other restrictions with my checking account? And those are all things that you should look into when you are opening a checking account, because not all checking accounts are the same. Next, we're going to talk about electronic banking. Okay, and this is just moving money digitally. Okay, it's not actually taking the $1 bill and putting it in one account, or taking it out of one account and putting it in another. It's moving it electronically. We're going to take a look at the options for ATMs, personal computers, cell phones, tablets, and other electronic devices. Those are different types of electronic banking. The first thing we're going to take a look at is in our e-banking services, automatic teller machines, ATMs. You can withdraw cash from a bank account, and that's where most people use ATMs for. You can actually get cash advances on credit cards. So if you have a credit card, you can get cash and it'll attach it to your credit card bill. You can make deposit and transfer funds. And you can check your account balances. Not many people do that anymore, but when you take money out of an ATM, it will tell you what your balance is. And again, banks may charge a fee for using the ATM. Okay, so again, you put in your card, you punch in the code, you punch in how much money you want from your bank account, and if you have the money in your account, it'll spit out the money for you. Payments at point of sale, and we've seen all kinds of different ways that you can make payments. Here is one example. It's just swiping your card. Merchants accept the debit card to pay for purchases, gas station stores, just about any place you go. You can use it in vending machines and so forth. So that's your point of sale, electronic. So once you swipe your card, especially if it's a debit card, it'll transfer to your bank. Check to see if you have money. If you have money, it will pay the business that you are using it at. Direct deposit, and some of these we've already covered in a little detail, but again, I'm just showing you some of the e-banking services. Direct deposit, again, money from your paycheck and government payments are put directly into your checking account. When they talk about government payments, the biggest one is if you are getting Social Security payments or if you are receiving a tax refund from the IRS, they can put it right into your checking account. You don't have to worry about taking it to the bank. Funds are deposited electronically and available automatically for you to use. So that's one of the positive things about a direct deposit is funds are available for immediate use and it saves time. So if you get paid this morning for your last 2 weeks of work and you get the check, it's in your hand, you're waiting till you're done with work, and then you go to the bank, you put it into the bank, you deposit it into the bank, they go through all the process, and within about a day, you have your deposits in your checking account. So again, you got it in the morning, and it might not be till the next afternoon that you can actually use the money. If you have direct deposit and you get paid this morning, your money is in your account right away this morning. And so that's where this comes in. Funds are available immediate. So that's one of the positive things about direct deposit. It's not only safe and saves time, but it's ready for you to use right away. Automatic bill payment requires a bank and a customer to authorize preset amounts for monthly expenses. The bank will deduct the payments from your account and transfers them to the appropriate company. The thing that you have to remember is you have to record your transactions so you don't overdraw on your account. So again, if I know that I have to pay my cell phone bill every month and it's going to be the same every month, I can set up automatic bill payment with my bank. When the 20th of the month rolls around, it is going to automatically pay my bill for my phone. But again, you have to remember, if you're writing things down, you have to write it down that you spent that money so that you don't overdraw in your account. Debit card transactions. When the debit card transaction is processed, the amount of the purchase is deducted from your checking account. It works like checks, but the money is electronically taken from your account. Sometimes with debit card transactions, you use a PIN, a personal identification number, and this will identify you as a card owner. It protects you so no one else can access your account. So again, do not share your PIN. And another thing, that debit cards are also called check cards. And just to clarify it here, remember, a debit card will take the money directly out of your account and make payment. If you use a credit card, which looks a lot like a debit card, but when you use a credit card and you keep swiping it, it's going to accumulate the total, and then you will get a bill to pay at the end of the month. And sometimes it's a surprise as to how much you have accumulated on your credit card. But a debit card takes it directly out of your account. Advantages of debit cards, again, you don't have to write out checks. And you can get it set up so that you cannot spend more than you have in your account. So if you get down to a certain dollar amount and you try to use it, it will tell you that you can't spend anymore because you don't have it in there. And again, that's something that you'll want to make sure that you double check with the bank to make sure that it is set up for that. Other types of electronic payment options is online payments. Online bill payment service between buyers and sellers. You might get a bill in the mail. Maybe you have to pay your utilities, and it says you can pay this online, and then you just log in and make payments. It's not taking it out of your account right away or automatically. Okay, you decide that you are making this payment, and you might have to type in some information that deals with your bank. Store valued cards is another electronic payment. We call them gift cards, prepaid cards. You can get gift cards or store valued cards just about anywhere for any type of business. And again, they're preloaded with a certain dollar amount. You can only spend what's on that card. Sometimes you can reload them, put more money on them. Smart cards is another electronic payment option. It's similar to an ATM card, and it's embedded with a microchip that stores prepaid accounts as well as account balances, transaction records, insurance information, and medical history. Smart cards can have just about anything on them. Sometimes they use them in colleges and universities, and the students are able to not only use it as a debit card or like a gift card, but they can also use it when it comes time to pay for lunches in the cafeteria. They can use the same card when they want to check out a book. So it can store lots of information like that. Insurance information, it might have your medical history on it, and so forth. Advantages of electronic fund transfer. Remember, it is quicker and less expensive for banks. It reduces the chance of losing money, and it creates an electronic record of your money. So you can look online and you can see exactly where every penny of your money is going just by, it'll say an automatic payment, it might be a direct deposit, it might be your debit card or whatever. So it does create electronic record of your money.